Welcome to the deep dive. We're your source for, well, cutting through all that noise and really getting to the core insights that matter in the world of Web3. It's uh it's always moving fast.
It certainly is. Always something new.
And today we've got some news that has genuinely sent ripples, maybe even waves,
Yeah.
through the whole crypto landscape. It's a story that honestly you really need to pay attention to.
Okay, lay it on us.
We're talking about a colossal $2.5 billion flowing into crypto investment products. And that's just in one single week.
Wow. Okay, $2.5 billion that's a headline number in itself. Huge.
Staggering, right. But here's the part that really makes you pause, the bit that probably made your ears perk up if you saw the headlines. It wasn't Bitcoin leading those inflows.
Ah, interesting. Okay.
It was Ethereum. ETH took the lion's share.
Right. Okay, that is significant because that's a pretty rare reversal of the usual dynamic we see, isn't it?
Exactly. A rare reversal.
For years, really, Bitcoin has been the undisputed king when it comes to institutional money flowing in. It's seen as the main entry point, the sort of safe bet for big capital.
The digital gold narrative.
Precisely. So this shift, with Ethereum suddenly out front, it definitely suggests something fundamental might be changing under the surface.
Yeah, something's brewing.
So today, that's what we're going to dive deep into. We want to explore why. Why is this happening right now? And maybe more importantly, what does it actually mean for the future of crypto? Especially for you listening in, whether you're an active investor, maybe a developer building in this space, or just someone curious about where Web3 is actually heading.
Exactly. That's our mission for this deep dive. We're going to meticulously unpack the reasons, the core drivers behind this really unexpected trend. We'll look at the implications, right, for different kinds of investors, the long-term holders, the altcoin watchers, the traders.
Yeah. How does it affect everyone?
And examine how this moment, this maybe pivotal moment, might reshape the whole Web3 ecosystem. We want to help you cut through the noise, get past the daily ups and downs, and really understand what truly matters here. You should walk away with, hopefully, not just facts, but real understanding. Foresight, maybe?
That's the goal. Context is everything in this space.
Absolutely. Okay, but before we plunge into the nitty-gritty of institutional flows and all that, just a quick but honestly really important note for our community.
Go ahead.
If you find value in these deep dives, if this helps you make sense of this, let's be honest, often confusing world, please take just a second to hit that like button, subscribe to the channel, maybe ring the notification bell.
It genuinely does make a difference.
It really does. Every comment, every share, it helps us immensely. It helps the channel grow. It boosts visibility in those mysterious algorithms.
Tells the platforms people are actually watching and engaging.
Exactly. And it directly supports us in, keeping this going. Creating more of this in-depth content for you is how we keep the lights on, keep digging deep. So that little click, it actually has a huge impact.
So thank you in advance if you do that. We appreciate it.
We really do. Thanks for being such an awesome part of this community.
Okay.
Okay, let's get into it. Section 1. The headline that shook the crypto world, Ethereum's moment in the sun. All right, let's unpack this. $2.5 billion in 1 week, flowing into crypto investment products. Just try to picture that amount of capital moving.
It's staggering, and it's important to stress, this isn't just, retail FOMO driving things. This scale points directly towards institutional activity.
Yeah, this isn't pocket change. This is serious strategic allocation, right? It paints a picture of major financial players making pretty substantial bets on where this is all going.
Absolutely. And we should probably clarify what we mean by crypto investment products here, because that term matters.
Good point. It's not just buying coins on Coinbase, right?
Not primarily, no. We're talking mostly about regulated vehicles. Things like the exchange-traded funds, the ETFs, which have been huge, especially for Bitcoin access recently. Then you have various trusts, like the Grayscale products that have been around for a while, and other kinds of structured funds. These are designed specifically for bigger players.
Players who need that regulatory wrapper, the compliance?
Exactly. Hedge funds, big asset managers, family offices, they often prefer these routes. It fits their operational and compliance needs. So the fact that this much money is flowing into these specific products, it really underlines the market maturing.
It's like crypto putting on a suit and tie, almost.
Kind of, yeah. It shows increasing integration into traditional finance. They want access, but they want regulated, familiar access. And these products provide that bridge. It suggests, a more fundamental embrace, not just pure speculation.
Okay, so the money's flowing into these regulated channels, but here's where it gets, like, really wild. The headline grabber, Ethereum, ETH, led these inflows, significantly beat out Bitcoin. And we called it a rare reversal because, I mean, just is, isn't it? If you've watched this space for a while, you know BTC is usually way out front.
Oh, absolutely. It's rare. Historically, and especially since the Bitcoin ETFs launched earlier this year, BTC has been the undisputed institutional favorite, the digital gold.
The gateway drug for
You
institutions.
could say that, yeah. It's been seen as the most established, the understandable entry point, the first stop for diversification or an inflation hedge. So, yeah, for ETH to not just catch up, but actually lead these flows, that's extraordinary. It really demands we ask, okay, what's driving this?
It feels like a fundamental reevaluation is happening in those institutional strategy meetings.
It certainly suggests that. A reevaluation of Ethereum's role, its potential,
Yeah.
moving it out of Bitcoin's shadow in their eyes. We're potentially seeing a shift in perception that, frankly, hasn't been the norm in the institutional crypto story so far. It hints they're seeing something more in Ethereum, something beyond just being digital silver.
So if you looked at one of those charts, the weekly inflow charts from CoinShares or Glassnode,
Yeah, the bar charts.
usually Bitcoin's bar is like the skyscraper and ETH is, maybe a smaller building next door.
Often, yeah, sometimes significantly smaller.
But this week, suddenly, ETH's bar is the one towering over everything. It's completely flipped.
A very striking visual. It immediately tells you, okay, the usual pattern is broken. Something's different.
And that's what we need to figure out. What forces could cause such a dramatic pivot? Section 2, decoding the why institutional shift and narrative momentum. Okay, let's tackle the big question then. The why now? This isn't just random noise. You don't see $2.5 billion move on a whim. We're hearing this phrase, growing conviction in Ethereum's role as more than just digital silver. What does that really mean for these big institutions?
Well, digital silver compared to Bitcoin's digital gold is a decent analogy, but maybe a bit limiting now. Bitcoin's primary institutional appeal has often been that store of value, that inflation hedge, almost like a commodity.
Right, simple, understandable.
Relatively simple, yes. Ethereum, though, is increasingly being recognized for its much broader utility. It's not just an asset you hold. It's a programmable blockchain.
Yeah.
Think of it like a decentralized global computer.
Powered by smart contracts.
Exactly.
Yeah.
And it's the foundation, the backbone for this huge exploding ecosystem, DeFi, NFTs, stablecoins, decentralized identity, all sorts of things. So institutions, it seems, are moving beyond just seeing ETH as maybe a faster transactional layer or another thing to hold.
They're seeing the infrastructure potential.
I think that's a huge part of it. They're recognizing its potential as the base layer for a potential new version of the internet, Web3, and perhaps more immediately for revolutionizing finance through DeFi. This isn't just about the price going up anymore. It feels like a deeper belief in the tech itself, its long-term applications.
So it's a bet on the future of digital infrastructure, almost like investing in the internet's plumbing back in the day.
That's a great way to put it. They're potentially investing in the rails for a new financial system or new digital economies, not just a new type of digital money. We're even seeing explorations of tokenizing real-world assets, bonds, real estate on Ethereum. That stuff gets institutions very interested because it speaks to efficiency, liquidity, transparency, core financial concepts.
That makes sense. So it's a more complex value proposition than Bitcoin's. Now, Bitcoin had its huge moment earlier this year with the ETFs. Massive inflows, proved institutions would buy these regulated products. That was huge.
Monumental. Absolutely a watershed moment. It basically de-risked crypto for a lot of traditional finance players, provided that clear, regulated path they needed. It normalized digital assets within their existing frameworks.
But now you're saying ETH is kind of drafting off that success and building its own momentum.
It feels very much like that. What we're seeing now with Ethereum is a similar way of building, but with its own unique drivers. There's this palpable anticipation, this growing expectation that Ethereum ETFs might get approved too.
The same path Bitcoin took.
Exactly. And that prospect alone is driving investor interest, both retail and institutional. It offers that same familiar, regulated access point that worked so well for Bitcoin. So for you listening, this isn't just market hype. These regulated products are the mechanism. They're the key that unlocks large-scale institutional capital.
They make it easy, safe, compliant, all the things big money needs.
Precisely. And that directly impacts market structure, liquidity, and ultimately price. Regulatory clarity, or even the anticipation of it, is a massive catalyst.
Okay, so we have this institutional conviction growing. We have the narrative momentum around potential ETFs. What does this signal for the broader market? We often hear that these kinds of product flows, they tend to lead the market, right? They come before bigger spot buying or rallies.
That's historically been a pretty reliable dynamic, yes.
Yeah.
These institutional flows into ETFs or trust, they often act as a strong leading indicator. Why? Because institutions usually don't make these moves lightly.
Do you do their homework? Lots of it.
Tons of due diligence, committee meetings, risk assessments. It reflects a deeper conviction, a longer-term strategic view. So when they start allocating to these products, it often signals an intention that eventually translates into buying the underlying asset directly on the spot market,
Which pushes prices up.
which tends to exert upward pressure, yes. So these flows aren't just a snapshot of now, they're potentially a glimpse into the future, hinting at a broader rally, possibly fueled by this sustained institutional interest in ETH and maybe its whole ecosystem.
And then retail often follows the smart money, potentially amplifying things.
That's a common pattern. Once institutional moves become clear, validated by price action, retail investors often jump in, creating a kind of positive feedback loop. So yeah, these initial flows could be the start of something bigger.
Section 3. Impact on the investor landscape. Who wins, who watches? Okay, let's shift gears a bit and talk about what this means for different people actually in the market. If you're holding Ethereum right now,
Well, this has got to feel like a pretty strong thumbs up, right? A really bullish signal. Oh, absolutely. For long-term ETH holders, these inflows are a significant validation. It reinforces the core investment thesis. And you hear the chatter, right, that maybe ETH could outperform BTC in the next cycle.
that narrative is definitely getting louder.
And analysts, especially the institutional ones, they watch that ETH-BTC trading pair very closely. It's like a barometer for relative strength. If that ratio is climbing, ETH is gaining ground on Bitcoin.
So these inflows directly fuel that possibility of outperformance.
They strengthen that thesis considerably, yes? It suggests growing demand for ETH relative to BTC, which could drive its market cap up faster. And we've seen this before, right? Think back to 2017 or 2021.
Yeah, ETH had some explosive cycles.
Exactly. Driven by things like the ICO boom back then, or later the rise of DeFi, NFTs, the merge.
Yeah.
There were specific catalysts. What feels different now is that the current catalyst seems to be this deep institutional interest in its fundamental utility, its yield, its role as infrastructure.
So maybe more sustainable this time,
Yeah.
less purely speculative.
That's the hope, or at least the argument. It feels like a more structural shift, driven by institutions reweighting portfolios based on a belief in Ethereum's long-term growth trajectory.
Okay, but what about the other side of the coin? The Bitcoin maxes, the passionate believers that Bitcoin is the one true king. How do they see this? Probably just a temporary distraction.
That's certainly a perspective you'll hear, and it's a valid viewpoint from their framework. Many might argue this is just short-term capital rotation, maybe institutions taking some profit from Bitcoin after it's run.
And parking it in ETH for a bit, looking for the next move.
Potentially, yeah, a tactical diversification, a short-term trade to capture some perceived alpha. But, and this is the key point, long-term capital flows matter more than these temporary tactical shifts.
So is it just a detour, or is it a real change in direction?
That's the multi-billion-dollar question, isn't it?
Yeah.
We need to distinguish between, say, quarterly rebalancing and a genuine, sustained shift in how institutions view Ethereum's role. Is it becoming a core, long-term holding alongside Bitcoin in diversified portfolios?
Not just a trade, but a strategic allocation.
Exactly. Arguments for short-term rotation exist, sure. But the narrative around ETH's utility, its ecosystem, and especially that staking yield we'll talk about, that suggests something more fundamental might be happening. Institutions like diversification, they like different risk profiles, and ETH offers something distinct from BTC.
Okay, and then there's the rest of the market, right? The altcoin traders, always looking for that spillover effect. How does this potential ETH dominance affect things like the layer 2's Arbitrum optimism and that whole ETH-aligned ecosystem?
The ripple effect. This is where it gets really interesting for a huge chunk of the market, because Ethereum isn't just an island, right? It's the center of this vast Web3 universe.
The base layer for so much activity.
Precisely. So when ETH gets this kind of institutional validation, this inflow of capital, it tends to lift the boats of projects built on or around it. Think about layer 2s like Arbitrum, Optimism, Base, ZK Sync. Their whole purpose is to scale Ethereum, make it faster and cheaper.
So if institutions are betting on ETH long-term,
They're implicitly betting on its ability to scale, which means they're indirectly validating these layer 2 solutions. Their success is intrinsically linked to Ethereum's success. More institutional confidence in ETH could easily translate to more usage, more developer activity, and more investor interest in those L2 tokens themselves.
And it's not just retail speculation driving L2s then.
Potentially not. Think about institutional DeFi strategies. High fees on Ethereum mainnet can be prohibitive for large-scale frequent transactions, but on layer 2s, suddenly those strategies become much more viable. You could see funds deploying serious capital into institutional-grade DeFi protocols built on these L2s, chasing yield or specific structured products.
Okay, so it creates real tangible demand.
Exactly. So if institutions are bullish on ETH, it's logical to assume they're implicitly bullish on the ecosystem. It enabled DeFi protocols, specific dApps, NFT platforms, infrastructure projects, the whole lot. This could absolutely be a driver for a broader altcoin rally, maybe what traders call alt season, but potentially one grounded more in institutional conviction this time.
Section 4. Ethereum's core strengths: staking, DeFi, and institutional appeal. Let's dig into some of those core strengths that make ETH appealing now. You mentioned staking yield. That feels like a huge differentiator, especially for institutions. This idea of ETH as an income-generating product.
It's massive. Honestly, this might be one of the single most compelling factors for traditional finance. Staking is core to Ethereum's proof-of-stake system, right? You lock up your ETH, help secure the network, validate transactions.
And you get paid for it in ETH.
Exactly.
Yeah.
You earn rewards, a native yield. Now, think about traditional finance, especially over the last decade or so. Finding reliable yield has been tough.
Yeah, low interest rates everywhere.
So here comes Ethereum, offering a built-in, relatively predictable income stream directly from the protocol. That's incredibly attractive. It's not just hoping the price goes up, it's generating returns along the way. It fits much more neatly into their existing financial models.
Unlike Bitcoin, which is mostly just about price appreciation, right? No native yield like that.
Generally, no. There are ways to earn yield on Bitcoin through lending or other products, but it's not inherent to holding the asset itself in the same way staking ETH is. And we've seen huge growth in things like liquid staking, Lido, Rocket Pool, etc.
Making it easier for institutions to get involved without running the tech themselves.
Precisely. They abstract away the complexity. Institutions can stake their ETH, get a liquid token back representing their stake, and eventually even use that token in other DeFi applications to compound yield. It creates layers of opportunity.
And all this staking locks up ETH supply too.
It does. If you look at the data, a significant and growing chunk of ETH is locked in staking contracts. That reduces the freely circulating supply, which, basic economics tells us, can increase scarcity and potentially support price over the long term. So for institutions, staking is this really compelling mix: growth potential plus a native income stream plus decreasing liquid supply. It's a powerful combo.
Okay, staking is huge. And then there's DeFi. Ethereum is still the heartland, right? These inflows must highlight its central role in all that Web3 infrastructure.
Undeniably. When we say Web3 infrastructure, we mean everything from those smart contracts, the dApps, NFTs, stablecoins, lending, borrowing exchanges, the whole decentralized financial system being built.
The Lego blocks of new finance?
Kind of, yeah. And Ethereum, despite its challenges and competitors, remains the most battle-tested, most secure, and has by far the largest and most active developer community. That network effect is incredibly powerful.
Hard to replicate overnight.
Extremely hard. So when institutions invest in ETH, they're not just buying the coin, they're buying exposure to that entire, vibrant, innovative ecosystem built on top of it. They're investing in the potential future of finance, of digital ownership, of decentralized online services. And Ethereum is currently the main stage for all of that.
Right.
We're seeing banks experimenting with permissioned DeFi pools on Ethereum using ETH-based stablecoins. It's becoming embedded.
Which brings up the competition: Solana, Avalanche, others. They've pitched themselves as faster, cheaper alternatives. How does this ETH inflow surge affect that debate? Does it make it harder for them?
It certainly refuels the debate, that's for sure. The multi-chain narrative is real. These other platforms offer compelling tech, often addressing Ethereum's known pain points like speed and cost head-on.
The ETH killers narrative, though maybe that's faded a bit.
It waxes and wanes. But these massive inflows into ETH, especially from institutions, kind of force a reevaluation. Yes, speed and cost matter, especially for retail users or certain high-frequency applications. But what do institutions prioritize most highly?
Security, reliability, regulatory comfort.
Often, yes. Security, decentralization, predictability, a proven track record, regulatory clarity. Ethereum, despite its gas fees, scores very highly on those, especially security and decentralization. Its network effect and developer base are also huge moats.
So this might strengthen ETH's position as the premium, most secure base layer.
It could be interpreted that way. It reminds everyone of Ethereum's enduring advantages. But it also pushes competitors to sharpen their own value propositions. Maybe they don't need to beat Ethereum at its own game. Perhaps Avalanche focuses on its subnets for custom enterprise blockchains. Maybe Solana leans into specific niches like high-throughput payments or certain types of gaming.
So different chains for different institutional needs.
Potentially. The debate might shift from who wins to which tool is right for which job. Ethereum's current institutional surge definitely validates its model as that foundational settlement layer, but it also clarifies the specific advantages competitors might need to emphasize to attract their own distinct institutional interest.
Section 5, supporting evidence and what comes next.
Okay, let's look at some real-world examples. It's interesting to contrast, say, MicroStrategy's big Bitcoin bet with what we're seeing now with these broader ETH product inflows. Different philosophies at play. Totally different, yeah, and it shows the evolution. MicroStrategy, led by Michael Saylor, made a very specific, very bold corporate treasury decision. They basically swapped their cash reserves for Bitcoin, viewing it purely as a superior store of value, digital gold, and inflation hedge. It's a concentrated long-term bet on that specific narrative.
All in on BTC as a treasury asset.
Pretty much. These recent ETH flows, though, happening through diverse products like trusts and potential ETFs, they suggest broader motivations. Yes, store of value might be part of it, but it's likely mixed with seeking that staking yield, wanting diversification within crypto, or getting strategic exposure to that whole DeFi and Web3 ecosystem we discussed.
So it's less of a single thesis and more of a portfolio approach.
It seems that way. It highlights that institutions aren't monolithic. They have varied reasons for getting into crypto, and they're increasingly seeing different roles for different assets. It's not just Bitcoin anymore. It's a more nuanced strategic allocation across the digital asset spectrum.
And underpinning all of this is the importance of those regulated products. The Bitcoin ETF launch was the proof of concept, wasn't it? It showed definitively institutions will come if you give them the right vehicle.
Absolutely transformative. Cannot overstate its importance. It provided that compliant, familiar, easy-to-use on-ramp that traditional finance needed. Regulation for institutions is paramount. It addresses compliance, custody, investor protection, liquidity, all the hurdles that kept many on the sidelines.
And the transparency of the ETF flows helps too, right? We can actually see the money moving.
That's a huge benefit. The daily inflow and outflow data for the ETFs gives us this unprecedented, almost real-time window into institutional sentiment and capital movement within these regulated channels. It's much clearer than trying to guess from opaque private fund data.
So the big speculation now is, what happens if or when an Ethereum ETF gets approved? Could we see an even bigger rush, given everything we've talked about, the utility, the yield?
That's the billion, maybe trillion-dollar question everyone's pondering. There's a strong argument to be made that an ETH ETF could be incredibly compelling. You combine the regulated access point with Ethereum's multifaceted utility and that native staking yield. It could potentially attract an even broader range of institutional investors than the Bitcoin ETFs did, or at least add a significant second wave of capital. It's definitely the next major catalyst everyone was watching.
Okay, so as we wrap up this fascinating deep dive, what should we, and importantly, what should you, our listeners, keep an eye on? What are the key signals or data points to track going forward?
Good question. Definitely keep watching the ETH-PTC ratio analytics from platforms like Glassnode or CryptoQuant. They offer deep on-chain insights beyond just price, things like network activity, fees generated, developer commits, comparing the fundamental health of both networks.
Look under the hood, not just at the price ticker.
Exactly. Also, pay close attention to research coming out from established financial players. Think ARK Invest, Fidelity, folks like that, who are publishing detailed analyses on Ethereum's institutional role. Their research carries weight and often signals broader institutional thinking.
When mainstream finance starts analyzing it seriously, that's a signal in itself.
It absolutely is. And look at metrics like total value locked, TVL, in DeFi, particularly across Ethereum and its main layer 2s. Track the growth of institutional staking solutions and the amount of ETH being staked overall. These data points, taken together, paint a much richer picture of adoption and ecosystem health than price alone.
Oh, true.
So just to kind of wrap it all up, what we've seen with Ethereum recently taking lead in those institutional inflows It really feels like a potentially major shift, maybe even a structural one.
Not just a blip.
Doesn't feel like it. It seems driven by a growing recognition of ETH's unique utility, its programmable nature, that very attractive staking yield, and importantly, the increasing regulatory clarity or anticipation thereof. It suggests institutions are moving towards a more diversified crypto strategy, seeing Ethereum as a foundational piece alongside Bitcoin, not just a side bet.
And hopefully this deep dive has helped you, our listener, really get behind the headlines, understand the why. We aim to give you that shortcut to being genuinely well-informed about these really crucial market shifts.
Context is key.
Totally. So here's where it gets, really interesting. The final thought we want to leave you chewing on.
Okay.
Two related questions, really. First, do you think Ethereum is actually set to maybe flip Bitcoin in terms of institutional importance or portfolio weight in this next cycle? Could it become the co-leader or even take the lead?
The flippening debate. Institutional style.
And second, considering that staking yield, is Ethereum fundamentally a better institutional product now than just a Bitcoin ETF? Or are they playing different but equally vital roles? Maybe one is digital gold, the other is productive digital infrastructure.
Those are the big strategic questions institutions themselves are likely grappling with right now. There are really compelling arguments on all sides. Is ETH the better long-term bet due to yield and utility? Or is BTC the safer, more established store of value? Or is the answer simply both?
Yeah, maybe it's not either.
Probably not.
Yeah.
But how institutions answer those questions for their own portfolios will absolutely shape the future of Web3 and its intersection with traditional finance. We definitely encourage you to think critically about it, maybe dig into some of that research we mentioned, form your own view.
Keep learning, keep exploring.
Absolutely. Because in this space, understanding why things are happening is crucial for navigating what comes next. And this shift in capital is definitely something to understand.
Well said. Thank you so much for joining us on this deep dive into crypto institutional flows. It's been, really eye-opening.
My pleasure. Stay informed, everyone, and keep digging deeper.